what has happened in the past decade is that our attention span globally has come down. We've all become a little impatient thanks to the mobile devices in front of us. We want things instantly, right? Like, I want a credit card today, then I should actually get it in the next 5 minutes or 10 minutes. As Sujita was saying, now ICICI Bank is issuing cards within 30 seconds, which is just fantastic, right? So given we live in this future of digital and instant gratification and all-time connectivity, how have the rules for issuing credit cards have actually changed, right? Essentially, I'm talking about the change that is coming from the customer side. Of course, we also have changes coming in from the regulatory side as well, and banks' own ambitions, issuers' own ambitions, and technology has also caught up. For instance, we now have form factors such as NFC devices that can be used to make payments with cards pretty much instantly, right? So in this era of customer expectations, which are pretty wild, in the UPI era of everything being instant, and in this digital era where we know a lot more about the customers, right? What has changed, right? Would love to discuss that with this fantastic panel. I would like to invite everyone to introduce. I'll call out the name and then would be great if you can introduce. Let's go first with Arvind.
Hi Ram, hi everyone. Good evening. I'm Arvind Butola and I head credit card product and portfolio for AU Small Finance Bank. AU Small Finance Bank is the youngest, I would say, and only small finance bank which is issuing credit card today. It's been close to 20 months journey for us. And having said that, I think despite being new, we're trying to build a very tech-focused and customer-centric business as far as our credit card issuance is concerned. So yeah, Ram.
Great. Thanks, Arvind. Would love to invite Sony from South Indian Bank.
Thanks, Ram. Hi, everyone. I'm Sony. I'm the General Manager and Chief Information Officer of South Indian Bank, heading digital and technology. I've been with the bank for the past 2.5 decades and would love to share the thoughts on this topic.
Great. Thanks, Sony. Great to have you here. Would love to invite Sounak from CIBIL to introduce.
Everyone, my name is Sharma. I lead market planning for credit cards and consumer loans for TransUnion CIBIL. Most of my about 20 years of professional experience has been in cards and payments. So this is a topic I'm very passionate about. Thanks for having me in this forum, Samir and Ram.
Great, great. Welcome, Sounak. Hi, Sujai. Nice to see you here. Sujai, could you please introduce yourself?
I think you just did, Ram, but hi, I'm Sujai, and I'm the head of business development for Visa in India. Thank you so much for inviting me to the panel. I think it's a very interesting topic. Credit expansion is, of course, a huge opportunity in this country, as many of us know. So glad to be with this eminent set of panelists to discuss the topic and how we can, get issuance to scale many fold.
Great, great. Welcome, Sujai. We have Tarun Sharma from Kotak Mahindra Bank. Tarun, could you please introduce yourself?
Hi, everybody. Good evening to all of you. Happy to be on the panel. I take care of credit card portfolio product digital and CX in Kotak. I've been here for close to 2 decades now in the same place. Let's see how we kind of navigate this conversation with such nice experienced personalities on the panel. And obviously Ram is there.
Great, great. Welcome, Tarun. Great to have you here. So we have, as Sujita was saying, risk is one of the most important aspects of credit business. And hence we thought it would be, we cannot have a panel without someone from CIBIL, which essentially provides the safety net for all of us in this business. And of course, the technology protocols, which is essentially the roadmap for Visa, right? And then we have awesome set of bankers who are actually running the business. So let me actually start with Arvind first. AU Small Finance Bank is one of the latest to issuing credit cards. And they've already in place more than 3 lakh cards in the market, right? And would love to understand, Arvind, this is a rapid expansion. You've also recently launched the Lit card, which is a very, very unique take on card benefits. How did you think of launching such a unique card into the market? What's been the response from the customers? Has there been any new learnings for the bank from this product?
So yeah, Ram, I think the small correction, we more than 400,000 cards now, not 300,000. Yeah, but having said, I think Ram, it's a very long story how we've actually gone creating a Lit credit card, but I will try to articulate it very short. I think what we've tried to spend a lot of time in identifying the problem rather than actually finding a solution. Like how do we make our mark in this market where there are only very established player, correct? And when we spend a lot of time in finding the problem, what we've got is the Lit, correct? Because what we've understood from the customer that what they want is kind of everything. They kind of want to a product which can engage them for say 3 to 5 years, correct? Credit card are meant for 3 to 5 years, correct? The life cycle is close to 5 years, and if you do category based product, you can't engage them for the next 3 years with the same category of benefit, correct? So we've identified that. So hence they wanted that flexibility that they change feature as their lifestyle is changing or their life requirement is changing. We've also found that the pricing is the biggest difference in taking up a card, correct? Customer hesitate to pay a price for the credit card, and hence we thought, how can we come up in a product where we only charge customer for his usage and not anything else? So I think talking to the customer, identifying their requirement was basically the idea how we came up with the Lit product. And Lit product, we today give complete flexibility to the customer to choose the feature they want, correct? There is no specific category for the customer. They can actually choose both e-com, offline, online, and there are say 18 or 20 categories or benefits they can choose in the same plastic, same card, and they can always change it. Suppose you choose something now and say next quarter or say next day itself you want something else, you can choose that and you only pay for it. So that's that was the thought process when we came up with this product. And I think we're very satisfied with the response so far today. Lit actually contribute a significant percentage of our sourcing. Along with it, I think we see a very good demand of the customer which is coming online, and we as a bank being on the digital journey from the day one, the focus has been to serve customer digitally, and there we see a lot of traction on this card. And today we actually know the rank order of all the feature in which what the customer want, correct? Whether they want reward or they want cashback or they want the e-com card or they want the lounge card. So we know that because that the feature adoption shows that. So we're happy with the initial response that the customer find it more engaging, which was our objective, that they create the engagement beyond that plastic, give them a very engagement beyond the monthly statement, tell them daily and on daily basis that this is the feature they have, this is the cashback they have earned, or how much they can earn more. So we've done all that. So I think so we're happy or satisfied with the response so far, and they've been learning on daily basis. The customer is actually smart to tell us too many things which we can do on that product. So yeah, Ram.
Great. I think Arvind, one of the key outcomes of, if I heard you correctly, is that you get a pulse of what the customer wants at a very high granular level. Right.
Yeah.
Which is fantastic. Fantastic. I would like to ask Sony a question about their foray into the credit cards. Sony, South Indian Bank has partnered with One Card to launch a product a unique product proposition. In fact, the model itself is pretty unique, Sony. And the number of cards have also been pretty sizable, right? What do you see as the like? How has the journey been for you in partnering with a fintech like OneCard to launch your card into the market? And what's been like the key takeaways for the bank from this partnership?
Yeah, so as you hinted, as far as the bank is concerned, this is the first card that we are doing on a complete on-book basis. In our 90 plus years of existence, we have had various forays into credit cards, but mostly it was either on the referral side or maybe all variants of referrals primarily without having taking a dip or bite into the portfolio per se. And one of the reasons why we were a little hesitant was because the card business itself was something new to the bank, and we wanted to test the waters before doing anything on a big way. And last year, when we were evaluating our current relationship with some partners, we felt that it's high time that we move on to something different, either on our own or in partnership with somebody who has shown credible performance or platform strength, etc. So our evaluation ended with FPL Technologies, which is prominently known as OneCard, who were just setting up and had a tie-up with one bank at that point of time, and who were looking around for partners. The fact that we knew the founding members also helped a lot. They bring in tons of experience on the credit card business, plus a great technology platform which they had developed on cloud, which meant that the time to market would be very fast. And we were left with creating the guardrails for integration with our current systems, plus the underwriting logic and aligning our underwriting policies with what they could offer. And then within a matter of almost 3 to 4 months, we were ready from a tech and business side for a launch. So we started off by offering this on a pre-qualified basis, which gave us a good feedback in terms of the usage of the card, the feel of the card. It's a metal card also, so the physical aspect is also something which is different. The entire journey that was designed was completely paperless, fully digital, and the idea was that we should be able to say yes or no within minutes, and then that will be followed by a full-fledged KYC also immediately. So the whole process was digital. The second biggest thing was to see how the customers would start using it. So that was also the first few months were very encouraging. So from pre-qualified, there was of course a closed user group kind of arrangement also done within the staff. Then we moved on to a secured card, which was the next step in the process against deposits. And finally, we hit new to bank. So today, in a matter of almost less than a year, we have hit around 175,000 cards. That's on building the book, but plus the fact that we are right up there in terms of the card spends per month, the number of transactions that the customer does per month, and even from the business basis also we have moved up almost 10 to 15 notches from where we were almost non-existent last year. So I think it has been a fantastic journey that we have been able to partner with the fintech and to our customers. And the fact that the usage from the customers is also something which is very promising is giving us the confidence that this is the right model to go forward. And we still see a huge potential for growth, not only for NTB, but also for the existing to bank customers, because that is also a much a rich source of data and potential that we have there. We are planning to ramp up, and we are also now starting to look at other variants like personal loan, etc., through the same kind of arrangements. And at some point, we will also be looking at alternate fintechs who can come and offer something very similar to what we have proven to be successful in the past. My takeaway is, for a bank like ours, which has started a little late, this looks like a great model to go, where there are no bells and whistles attached or no strings attached. We are looking at a player who is very strong technologically, who can do the program management. And after the new guidelines, we have also done the restructuring that is needed. And then ramp it up to a scale where we believe it will break even and start giving us benefits. So it's been a fantastic story on that ground till now.
Great, Sony. I think this is going to sound like music to the ears of fintech companies over here. And I also love the fact that you said faster GTM was achieved due to your partner being fully cloud-based system instead of a data center or a mainframe-based system, which is fantastic. Just one follow-up question, Sony, there. Do you see any significant difference in terms of the activation numbers, given that the user is completely digitally onboarded versus physically onboarded customers? Do you see any tangible difference there at all?
Yes, there is. In fact, I was hinting at the number of the transactions that is done in a month, which is very high. The activation percentages is also quite high when compared to the other alternate mode, because the customer is presented with a virtual card immediately, which he can start using, and then the physical one follows very soon. And that has also helped. And the fact that it is also backed by some great reward programs and great user interface through the app, etc., is also something that is actually rendering a better customer experience and activation.
Got it. Great. Now I'd love for Sounak to come in. Sounak, the question is, see, the overall credit ecosystem is now expanding. Fintechs have made the credit easier to avail through partnerships with the banks and through their very innovative marketing campaigns. They have kind of lifted the stigma that comes to taking a loan. Now, how do you think the customers are evolving in this kind of an atmosphere, right? And how do you think this is going to change the landscape of credit cards, given this kind of rapid adoption, right? Where do you see this going, Sounak?
Yeah, absolutely, Ram. So fintechs positioned credit as another convenient way of paying, versus taking a loan. With credit being available at checkout, be it in physical stores or online. So that easy availability has to some extent helped break the hesitation or stigma, as you said, Ram, of opting for credit. Now, what's interesting though is that this has not dented credit cards growth in India. We did a study on BNPL financing earlier this year and found that taking a BNPL doesn't cause any significant attrition or drop in spends among consumers who already held a credit card. Of course, BNPL was also offered to NTC and new to credit and near prime consumers, or those with a slightly lower credit score, those who didn't have a credit card. But even among that segment, BNPL take up and repayment often helped them graduate their credit scores, and some of these customers later applied for a credit card. So if you ask me, there is a healthy interplay at work here, with limited cannibalization. The primary reason for that is we have a big credit card penetration runway still available in the country. At about 5%, only about 5% of adults have a credit card here. So all said and done, if used responsibly, a credit card can still be a great product for payments consolidation. Now, the other thing here is, remember, some consumers opted for fintech loans or BNPL because of underwriting innovation done by these fintechs, with merchant data, for example. But others also applied for ease of process, for application journeys integrated into their purchase journeys. In the last 3 years, and Sudipta also alluded to it, most credit card issuers have revamped their application journeys, with video KYC, application form pre-fill, automated fraud checks, verification waivers, seamless onboarding. Some co-brands have also partnered banks in this user journey innovation. So over time, that ease of applying of the CX gap has to some extent come down, right? Of course, for internal to bank customers, the example Sudipta gave was very relevant, which is, some banks are now pre-approving customers so that in a matter of seconds or minutes, they can actually have a digital card issued for them. So that's a different experience level. Now, card issuers also understand that they can do more on the underwriting innovation front, to your point. So we see strong interest among issuers to card on the new to credit segment, not only based on traditional internal liability-based scoring, but also based on newer new to credit scores and attributes based on both credit bureau data and alternate data. Similarly, there's been a return of appetite to issue lower limit cards to lower income and marginal risk segments. So these are helping grow that, cards in force base numbers we spoke about at the beginning of the call. So in this context, one metric we track, for example, other than new to credit is new to product, or new to credit cards in this case. And the new to credit card contribution in card origination has actually seen a healthy rise in the last 2 years, which means more new consumers are getting carded now, instead of multi-carding on the existing carded base. That's a welcome change. So by and large, the narrative has changed from concern on whether BNPL is eating into the credit cards growth story to card issuers simplifying their CX and onboarding policies and processes. And today, consumers having a great variety of choices in checkout financing. One last point, we have spoken about the consumer segment so far, But outside of the consumer segment, innovations in the merchant and MSME segment will also democratize credit cards for micro enterprises. So working capital requirements of small traders can be met with a credit card, for example. And with maturing credit data on the MSME segment, carding will become easier. Now, additionally, there is also availability of alternate data like banking, GST, and invoice information, which will be accessible more easily going forward via account aggregators or otherwise. That will help speed up carding and short-term financing on the 70 million odd MSME base. I'll probably end by saying that banks and lenders have also made it easier for consumers to monitor their credit scores, and there are credit risk policy guardrails to ensure easier availability of credit doesn't lead to loan stacking or over leveraging among consumers. So with that, I'll hand it back to you, Ram.
Okay, thanks, Sounak. I think there were some very interesting points. You mentioned that for SMEs, it's going to be pretty useful now that we have more data about SMEs. Earlier, I think in a decade ago, the most difficult part was about distribution. Right? Today, if you look at fintech companies like Khatabook, right, they have actually cracked distribution, and distribution has become a commodity. Today, the challenge is now actually in the credit ecosystem, which is about, can we extend credit to SME companies, right? And just one follow-up question there, Sounak, do you see the total credit limit coming down per credit card that is being issued, right? So essentially, let's say, as the per capita of the country increases, right, more and more customers become eligible, but for the banks, for the economics to work for banks, there has to be a certain threshold of credit limit which should make sense, right? Like today, we cannot issue profitably a 5,000 rupee credit limit card. Do you see the credit limits overall across these new issuances tapering down, or are they remaining constant?
So Ram, for that, big dream to be realized for us to get the next 100 million or 200 million cards, that needs to happen. And, the only way that can happen is what Sudipto spoke about earlier, which is the unit costs need to come down. The costs of operations, cost of underwriting, cost of digital collections, make customers do more self-help, self-service. When that happens, that's when cards will really take on the other form factors. We talked about BNPL earlier. We are already seeing that happen to a small extent. Average limits have come down for some major players. I spoke about that. But to happen, and UPI and credit is probably going to be another enabler. That opens up a new segment altogether by expanding acceptance. So yeah, I'm confident that will happen over time, Ram.
Okay, great. Now, would love to ask Sujai. Sujai, you have a fantastic vantage point to the ecosystem, right? And I'm pretty sure you're tracking a lot of contributing factors. The ecosystem has changed dramatically in the past decade, right? What do you see as the top 3-4 factors that are contributing in this credit ecosystem to help expand it? And subsequently, would love to understand, the role of Visa as well, right, in terms of bringing out that technology form factor, simplifying it for customers, right? How is that? Would love to cover that as well.
Sure. No, thanks, Ram. Let me address the first question initially. So I think there are certain fundamentals that are driving this belief that there's large credit expansion opportunity, right? I mean, at a macro level, India is supposed to be the third largest economy by 2030. So there is rising GDP growth and GDP per capita growth. There's, of course, the huge digitization scale up that has happened on the back of the public infrastructure that has been set up, as well as penetration of internet and mobile phone penetration, et cetera, with 3G becoming 4G and now 5G, that will only improve, right? So there is a large macro plus infrastructure play, which is the bedrock, I think, of digital payments overall, and hence card payments in particular, and perhaps credit specifically. I think what's also happened is that, while I know this panel is about issuance, one has to realize that issuance is just one side of the credit card coin, right? One of the reasons why credit cards were considered elite products is also because there really wasn't too much acceptance till a few years ago. So if you only have acceptance in the tier 1 cities, by definition, you will always look at, acquiring customers from that particular geography who are relatively more affluent than those in, say, tier 2, tier 3 cities. Also, if the costs of acquisition are very, very high, you will necessarily need to acquire someone whose incomes are large enough to justify what you just said, limit large enough to drive usage and eventual economics. And finally, of course, you will look at segments that are more, I guess, risk friendly, so to speak. So all those three combine into, or have combined in the past, into making credit cards a neat product. Over and above the economic growth and the infrastructure growth, I think what we've seen in Visa over the last 2 or 3 years, even during COVID, is that issuers in particular have become much more flexible and open to experimenting and testing out different models, be they credit acquisition models or fully digitally assisted, leveraging co-brand partnerships, leveraging the BIN sponsorship model, etc. Looking at new CVPs, so moving away from just the standard rewards, cashback miles to what Arvind spoke about, giving customers the flexibility to pick and choose their benefits from one cycle to the next, or looking at one-click payments. So Visa has a product called Visa Safe Click, which enables one-click payments and hence removes friction in the e-com space, or even things which which are typically considered back-end, but automation of dispute management. All of these things have helped, I guess, improve either the cost of acquisition or the cost of operating a credit card business, and hence allowed issuers to take a more liberal view of extending credit. Finally, I think there's also a plethora of economic models now that are being tested out. So Shaunak talked about, of course, BNPL as an alternative to credit cards thus far, but the openness to give slightly lower limit cards, playing around with APRs, playing around with the interest-free periods, that all of these have made economics that much more, I guess, supple when it comes to putting out a credit card business. And on the back of all of this is, of course, the massive investments that have been made by issuers, by fintechs, by processors in improving their technology stacks, either building it themselves or partnering. So whether it's onboarding, whether it's whether it's customer engagement, whether it's risk management, a lot of those things have come into play. So I guess these are the 3 or 4 fundamental pillars that we believe are driving both the demand as well as the supply of credit cards, as it were. And this will only go to the next level once some of the new frameworks, whether it is the Open framework or the account aggregator framework, and even as acceptance scales, will convert this opportunity into reality. Sorry, to your other question on how Visa is helping. So, a lot of people confuse Visa as a credit card company. We are not. We are the world's largest card payments network, and also India's largest card payment network by payment volume. So we acknowledge that we have a very significant role to play. In fact, we are privileged to play that role in converting this credit expansion opportunity into reality. And our role has many parts. So fundamentally, it is to ensure that our partners, which is typically issuers, acquirers, processors, increasingly fintechs, etc., have access to an always-on, supremely reliable and resilient, secure network that they and their end consumers can access 24/7. The second, of course, is leveraging our brand, our global reach, and the over 6 decades of experience that we have, and the wealth of data that flows through our network to bring the best global practices to India, right? Whether it's in terms of product design, whether it's portfolio management, whether it's risk, technology, advisory services, etc. And if you allow me to take a couple of examples. So, given the data flowing through our network, and of course we see it at an industry level, we have a lot of insight which can help our issuing partners to optimize their portfolios and drive further return on the investments that they're making. So whether it's activation, whether it's engagement, whether it's segmentation, whether it's creating personas, to the point Sudipta made earlier about working towards a hyper personalized engagement model for a segment of one. There's a lot of work that Visa is doing through its analytics teams and can provide as support to our issuing partners. I mean, very relevant from contextual. Visa is the global sponsor for FIFA. A lot of you would have seen the matches. We have a lot of Visa branding. We have the Visa Math Center, etc., etc. So being able to bring those global assets to our issuers that can drive spend and salience of both Visa as well as the issuing partner is another advantage. We have a bunch of risk management solutions that we built, which help to mitigate the risk of fraud and also help our issuers underwrite better. And then, of course, we have other solutions, including CyberSource, our payment gateway, which provides both transaction processing services as well as risk management for the seller side. Apart from this basic fundamental stuff, I think what Visa brings to the table is solutions that are kind of fit for purpose and designed for India. So over the last many years, so everything from EMV, chip and pin to risk to address the risk of fraud in the face-to-face environment, Bharat QR was largely built on M-Visa specs, and as Sudipta said, while it hasn't scaled to the extent in its first avatar, there are initiatives afoot to sort of reinvest and make it a potentially larger competitor to the existing UPI network, right? Tokenization, which is extremely important to drive secure payments on e-com, both card on file and device based. Other ways of removing friction. I talked about Visa SafeClick, which was a one-click payments platform, 3DS 2.0, which kind of enables risk-based authentication to evolve. What else does Visa do? So Visa is the glue that kind of binds the issuer and the seller side of the ecosystem. So co-brands, for example, are a great example of Visa bringing together the merchants and the issuers to help them unlock value. We keep an eye out for new use cases and categories for driving credit. So rent payments on card, for example, or supply chain finance on card. And finally, of course, fostering innovation, whether it is through participation in the RBI sandbox or running our own proprietary initiatives like the Visa Everywhere initiative, which was an outreach program we ran a few years ago. We got over 400 applications from fintechs to address some very fundamental problems in the ecosystem, including digital onboarding, underwriting of SMEs, etc. at that point in time. So I don't know, long-winded answer, but basically, yes, a quick snapshot of, I guess, the value that Visa adds to the entire ecosystem.
Absolutely. I think that reinforcing the confidence in the minds of the customers that, look, you are in safe hands is very important for the expansion of the credit ecosystem. Thank you, Sujai. I would love to come to Tarun now. In fact, one of the points that Sujai said that issuers have now become far more open and flexible. In fact, Kotak Bank has increased the issuance in recent years, right? The numbers actually show that. Tarun, what led to this? Can you talk about the top 3 factors that contributed to this increase in issuance and increase in market share for Kotak Bank? Also, another curious thing, Kotak has launched a secured credit card called Dream Different. What was the motivation for launching this card? And again, my question on this one is like, what do you see as the future of this?
Sure. First of all, the belief that if you look at 1 billion cards which are in the market, 8% are credit cards, and their 30% spend total from cards come from credit cards. So that's a kind of ecosystem which is running today. And we saw that out of this kind of a ecosystem, the growth is still intact. We are growing CAGR of 20%. We picked up 3 critical aspects of running this business and expanding it. Today, with a 5.7% market share, we have grown 166 bps in last 1 year. So clocking almost 12-13% of the new cards which are issued in the market are issued by Kotak. We first went with the complete drastic shift in our approach towards risk. We introduced scorecards, various cohorts, and coded it in BREs, business rule engines, so that it can be digitized. That was the first move we did. We created digital journeys for assisted as well as unassisted environments where our sales team can reach the customer, talk to them, and issue cards. But also then when, let's say, pick up any avenue where you meet a customer who is not existing customer of the bank, the cost of acquisition is very high if you go on the ground. But if you give a decision immediately and you do a biometric KYC, suddenly the equation changes. So we introduce these kind of things, doing a real-time decision, running VREs, they're doing video KYC or a biometric KYC, and issuing virtual cards in the journey. So reducing the cost of acquisition, extending it across. Today, all the salespeople, the complete fleet on street in Kotak is capable of issuing or picking up an application from a customer and issuing a credit card to the customer. So that's what has kind of helped us grow from where we were to where we stand today. Coming to secured cards, Sujai talked about credit expansion. While if you talk about just creating scorecards on existing database, we have some footprint thanks to CIBIL that we have a good safety net out there. But there's still a lot of customers who are not on, let's say, the CIBIL or they have not started using credit card or any kind of a credit instrument as such. We said, let them help build their credit kind of footprint. And we created a fully digital journey for secured card. Today we issue, within that journey, we issue a virtual card. So practically you can say that I have an FD or I do not have an FD. But you can come in real time, we create FD, we lean market, we issue a virtual card to the customer, and you can start using it. Let's say currently market has credit card, 60% spends are happening online. So if you're in a virtual card issued immediately, you can start using it as soon as you have it. So that's the power of digital, that you can create a very good safety net of all the risk elements you have. If I do it physically, as compared to digitally, I'll have a lot of elements where I can go wrong. Digitally, I can create very good guardrails to ensure that we do not go wrong and control remains within the system. So that's where we are on both the expansion side you talked about and on the secured. We are very serious about kind of growing in this market because we see it. Look at the ecosystem today. You have a regulator which is allowing a lot of innovation in the market to an extent that there's a cell which talks to fintechs also. You have issuers who are kind of catching up really, really fast, and you have fintechs who are creating experiences which in a credit card industry, which is like set up for so many years, did not actually come up in that sense. And you have networks like Visa bringing all these people together and saying, let's work. It's not a forced collaboration. It's a very swift move which happened that all the market players today in credit card industry are working together. I think that's the beauty of this whole ecosystem today. We want to participate in that to best of our capabilities. And that's what you see in the market today. Yeah.
Got it. Yes, Tarun. Yes, as the credit market expands, I think this gives opportunity for everyone. We'll take one question that I'm seeing pretty recently here in this Q&A. See, how are we weighing the risk reward to the business scalability toward penetrating into the deeper geographies, right? Essentially, this is the metro, non-metro, tier 3, tier 4, tier 5. Are we looking at, is the expansion predominantly coming from there? Will the expansion come without that segment? If I were to rephrase that question, right? Would love any of you to come in and answer that question.
So, Ram, I think it's an interesting question, but I think I can add a little on this because our journey shows a sense of this because we've actually focused on tier 2, tier 3 market and say a lot of new to credit card customer also, correct? And the way we see it, these customers are actually on the behavior side. They're not different from the tier 1 or say metro customer. I think whole credit goes to the acceptance in all these markets. The e-com acceptance in these markets actually help us to create the engagement with the customer in the sense their transactions, they're buying through e-commerce. So the acceptance is not an issue. So I think so far, because our book is new, the customer, we haven't seen the full life cycle, but the initial feedback which we see is encouraging in the sense the customer in the tier 2, 3, tier 4 also are equally engaged with the product in terms of the number of transactions. The spend we see is a healthy spends coming from there, and they're not hesitant to even use technology products like one-click payment payment, which Sujai has mentioned in this, and even making the contactless payment. So it's so I think technology or the digital has actually made it simpler. Now every customer who's taking credit card, they inform customer, they know if they don't make the payment on time, how it will impact their bureau score. So I think that education has equipped customer across tier 1, tier 2, tier 3, tier 4 to understand that credit card is a wonderful product if they use it within the say framework, and we seeing an encouraging response from the customer. Yeah.
Okay, that's interesting. I think the awareness of credit score in itself could actually bring down the risk significantly. Sujai, do you think it's a good idea for the regulator and the card networks to just, similar to the ANFI advertisements that we see for mutual funds, right? Do you think it's a good idea for us to advertise that, look, your credit score will get impacted if you don't repay your credit card bill? It's a general awareness kind of a campaign. I guess that could actually help towards the expansion agenda, the credit expansion agenda.
I think yes, that is important. But if there is this belief that credit cards are a bad product with hidden charges, with where if you take a card and spend, you lose your shirt, etc. I think it's important for us to change that image. To be honest, I think there's somewhat of a hover around that. And it may not be as big an issue as we believe it, because in these same markets, and maybe Shauna can bear me out, there is a demand for credit clearly, right? Whether it's consumer durable loans or two-wheeler loans or even tractor loans, etc., tier 2, tier 3, tier 4 markets, there is no dearth of people taking loans and paying them back, either through formal means or through informal. So the fact that people understand how loans work, we need to bring awareness of how cards work, because people perhaps don't have an understanding of how limits work, right? They have an understanding how term loans work. And hence the EMI bit, which is similar to the SIP bit on mutual funds, is well understood. Every month, boss, I have to pay this amount, right? But this thing on credit cards where, you can pay 5% and then, you don't need to pay it fully. I think that's the bit which needs to be addressed. Also, the fact that it's an extremely secure way of paying between the regulator's own stance and guidelines and the infrastructure and the checks and balances that both issuers and networks have put in place. It's a very, very sound way of making a payment, right? Is the other thing to communicate.
Sorry, thanks, Sujai. On that note, we'll bring this to a wrap.